What do good investment properties look like, especially right now with a mixed market? In this video, I'll go through 8 deals from clients in October and articulate for you why they're good, how to get them yourself, and key features of either the suburb or property that you can then copy and paste in your own investing to get amazing results with or without me yourself. If you're interested, carry on watching. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. And in this channel, we talk about property, we talk about the economy, and we talk about financial happiness. Hit the subscribe button, notification bell, give it a like, and let's go. Real quick, the first thing I want to show you is that all of these deals are verifiable. It's not like, I know some random YouTuber, right, making stuff up. It's not quite the case. Like, all of these are posted in my Facebook group with almost 25,000 people. The clients are tagged as well. You can DM them, you can join and ask more about these deals if you aren't sure about them, you want more information. My members, my clients, they're just nice people. They're happy to help each other. Okay, and I've been doing this for the last, I don't know how many years. Every 2 days I post a deal. So there's literally hundreds, if not thousands, on the Facebook group till now. Let's go into the first one. Okay, so $45,000, which is 12% capital growth in 4 months. Okay, this is during interest rates. So remember how like a year ago I posted a video about how interest rates don't just automatically mean all property markets fall? Here's a really good example. I mean, this is just in the last few months. It's gone up in value by 12%. Who would have thought if you listen to the media, right? And the great thing about buying in Perth right now, okay, is that rents are rising $10 each and every month. Now, that doesn't mean that your lease is going to go up $10 every month. What I mean is that every fresh lease is going up that much every single month. That's how much there's a rental shortage or crisis at the moment. 6.7% yield. You know, that means that it's almost positive cash flow. Basically, it is positive cash flow on an 80% LVR. So it really doesn't get much better than this. You know, people always cry foul about, oh, hey, property investors, you know, interest rates go up, you guys are going to have to, you know, foreclose, default. Well, it's not the case if you're buying high yield properties where you're not sacrificing the growth. You can get both. Let me repeat that. You can get both off market. Okay, this kind of deal, you know, you can't really get on real estate and domain all the time. Now, do you need to do some fancy course or use a buyer's agent to get an off-market deal? Absolutely not. In fact, I've done a video on how to get off-market deals right here on my YouTube channel. The basics are covered. Of course, the more advanced stuff takes more time to explain, but you can do that yourself, right? It's in a cul-de-sac. I really like cul-de-sac properties because they're quiet, and sometimes cul-de-sac properties aren't perfectly like shaped. You know, it's not a rectangular or oblong type block. That's okay, even if it's a weirdly shaped block. The fact that it's in a cul-de-sac supersedes that, okay? So Nick, as you can see here, he had no confidence, and now he's fully confident because he's done it by himself, for himself. Okay, he's achieved it himself. I haven't really got this property for him. I've just mentored and educated him, and now he's self-sufficient. He's saved $15,000 in buyer's agent fees. There's some data. Okay, purchase price $375. The July valuation just from March to July is $425. Okay, it's a real number. It's not just made up. Needed less than $70,000 to get into this property. Okay, so it's almost got like more than a 50% return on investment already just in a few months. Rent is $480. You know, we don't just want to buy high yield properties. We need those things to grow in value, and that's why we look at 30 to 35 data factors. I've done other videos on what those data factors are. Good vacancy rates, block size very good, built 1993, which means that he does get depreciation benefit, which is an added tax bonus. Okay, that doesn't mean that you should buy properties just for depreciation, because you're going to give half of it back when you sell to the ITO anyway. It's just a nice bonus that aids your cash flow. Any property company that tells you buy this because there's amazing depreciation, I don't know, run from those guys. Brick, I love that. He bought in WA from Sydney. Okay, so interstate, didn't catch a single flight. I won't go through all of this for every property, but just for this one. Okay, had the local due diligence done for free from a local property manager, rinse and repeat. He's building passive income. Okay, and look, let me just go through this real quick. I just wanted to say that, you know, don't risk giving the keys to your financial future to someone else. Do it yourself. It's not hard. This is not like rocket science, not like becoming an astronaut. Okay, you don't have to rely on a property company, including me, for every single property purchase. You can learn to do do it yourself. You don't need to pay a buyer's agent 15K just to send you properties of real estate or domain that you could have done yourself with hardly any time commitment. Or, I mean, this is a kind of selfish thing for me to say. $2,000 or $3,000 real estate course, there's 1,000 of them out there in Australia. It's mostly just from buyer's agents who are going to give you that as a gateway drug. It won't actually teach you much, okay, because it's super cheap. You get what you pay for, and then you're forced into using their full service. Okay, no one cares about your money as much as you do, as much as I profess to care. I also don't care as much as you do about your own money, so learn for yourself. Here's the property, right? I mean, this is beautiful, really beautiful property. Nice greenery, very private. I couldn't do much better myself. Here's the next one, triplex subdivision, 200K, potential profit, bought once again off market. Okay, so this one by Naveen, you can see he's tagged, you can DM if you like. He bought this at land value, which means that the property on top, I'll show you the picture in a second, doesn't look crash hot, but he didn't pay for it. The property was free, the house was free, the dwelling was free. He just paid for the land value. Okay, and that's great. And it's a corner block on an R20/40 zoning, which means you can knock it down and build 3. Does that mean he'll do that immediately? Probably not, right? Yeah, let this growth cycle occur, let the capital growth occur, and then in 2, 3, 4, 5 years, something like that, then he knocks it down and he can make easily, I mean, this is a conservative number, $200,000 plus profit. But why would you sell it? You would just maybe, build the triplex, sell one of them, keep the other 2, and there's like $10,000, $20,000 of passive income right there, just off one deal. Once again, it was bought off market just through easy relationship building through a few agents. It's not like he was a professional, quote unquote, spending full time on this for years and years. Anyone can do this. All right, so purchase price $620. He required $140,000, so it's a little bit more expensive than the typical type of property that we buy. He negotiated, yes. So here's a really important fact I want you guys to know and learn from. Other offers were actually higher, but his conditions were the best. So if you can, reduce your building and pest period, you can reduce your finance period or waive it altogether if you know you have enough borrowing capacity. If you can make it easy for the seller, they will literally, it sounds ridiculous, they will literally say, okay, well, person A is giving me $20,000 more, but person B, in this case Naveen, is giving me $20,000 less, but his causes are so much more convenient for us, we'll take that property. So you know that he's got a great deal because other offers were higher. Rent, this is not a positive cash flow property, let me be the first one to tell you, but the strategy was not positive cash flow on this. It was development plus growth. Okay, every strategy is different. You got to maneuver and use the data accordingly. 0.32 vacancy rate, Brick 761, Perth from Sydney, didn't catch a single flight. Here's the property, so it's a corner block, as you can see, nothing amazing, right? But the numbers and the money that's in here is amazing. It's literally a treasure trove. Here's the next one from Narasi. You can see he's tagged. Nice guy, really nice guy. 6% yield in a booming location despite interest rates. So once again, Perth, rents are rising so much more than interest rates are rising now. He's planning to buy another one this year. He's once once you become a property investor, all of this doom and gloom from the media, it dissipates because you can see what's going on. It's like the clouds dissipate. You can see the sun because of knowledge. It's close to the beach. Really, really well done. This is a typo. This property was not $435 million. It was $435,500. Okay. Total funds required less than 70. Rent is 500, so it basically pays for itself. Vacancy rate 0.55. Brick. Okay. And here's the property here. Really, really nice. Just for those of you who like to renovate, what you can do to this sort of property is you can paint the roof, and also you can pressure clean or paint the driveway. And as soon as you do that, you might spend $10,000 or even less, $5,000 on doing those two things, the property value goes up an exorbitantly disproportionate amount because the street appeal, the owner-occupier appeal from the curbside goes so much higher. And if you get a curbside valuation, the bank valuer coming, seeing what the property looks like, they're going to be like, damn, this looks amazing, and they're going to value it up, many cases $40,000, $50,000. So quick and free renovation tip right there. Next one, big beautiful block yielding 5.6% and extremely difficult to buy property. Once again, this is Perth. You can see we're buying in Queensland, we're buying in Victoria, we're buying in New South Wales, we're buying in parts of South Australia, but you can see we're predominantly buying in pockets, not everywhere, not just blindfolded pockets of Perth. Okay, once again, rents are rising. Huge block with an excellent land to asset ratio. I just want to deep dive on this for a second. Land to asset ratio. What that means is as a purchase price percentage, how much is the value of the land. The land is because the land's like what appreciates, the building that appreciates. So all those people, buying like expensive property in Sydney, Melbourne, Western, and your land is like 320 square meters, 400 square meters. My friends, like over the long term, it's the land that increases, not the beautiful bells and whistles house on top. So get something where the land is at least 50, if not more, like 60, 70% of the actual purchase price. 4 bedrooms going monthly. It's not made up. Like this is actually happening. Andrew Malevsky did this brilliantly from Sydney. I've done a whole YouTube video with him where you can hear from the horse's mouth, so to speak. Just Google it, YouTube his name with my name, and you'll find it on my channel. Purchase price $415. I want to say it was actually, the reason I say extremely difficult to buy a suburb is because it was extremely difficult to buy. Like for every property, there's probably like 20 people that want to buy it right now. So he's actually had to like make no two things about it. He had to work hard. Okay, it's not been a stroll in the park. He's actually had to work hard for this property. But the thing is that once you go, fossicking, trying to find diamonds, when you find it, it's been hard work. Once you found it, it's yours. And other people are trying to get that. And that's how the value goes up. Okay, not the perfect example because of, diamonds aren't actually that rare, if you know what I'm talking about. But this is the analogy that I want to use. He's got it. Now it's going in value because demand is more than supply. Less than 70,000 needed. So once again, you don't need a whole lot. 450. Rent almost pays for itself. Great data, good vacancy, big block. You can see that sort of pattern emerging of the types of properties you should buy. Now, many people would oversee or overlook this property because look, the driveway doesn't look amazing. But once again, like I said, that's a cosmetic fix. Doesn't have a garage. Hey, PK, why should we buy a property without a garage? Well, if the suburb that you're looking at doesn't always have garages, then you don't need a garage. Buy the typical type of property in the suburb. Don't buy the best one. Next one, 6% yield renovated Perth property, brick, solid and as an ox. So it's already had $50,000 growth this year. Amazing thing you should look out for properties, especially for people who are like kind of handy. They want side access to like a power workshop or to park their boat or something like that. But if you can find a workshop, especially in these kinds of, I wouldn't say working class suburbs, but kind of middle class suburbs where people, they like to get their hands dirty. They're not all snobbish and not want to get their hands on tools. They value this kind of workshop aspect so much, and they'll give so much more rent for it as well. Rents are rising, increasing cash flow. Dylan has done tremendously. He's tagged. You can DM him all about it if you like. 390, 500 purchase price. Once again, didn't need more than 70,000. 450 rent. Good data, low vacancy, big block, brick. He lives in Melbourne, bought in Perth without catching a single flight. All the due diligence was done for free for him on the ground by people who know the ground, the suburb, the street. He's just rinsing and repeating really. Here's the property. You can't really fault it. You can see it's kind of in this kind of dead end. So it's a beautiful, beautiful property. And once again, it's like there's no double garage, just a single garage. But in that suburb, that's normal. Okay, so you don't have to overlook that property just because of that. 24,000 instant equity and 7% yield on the suburb's best street. I want to make the point, sometimes people say, oh, look, you should buy the worst property on the best street. I don't fully agree with that. Okay, you should buy the typical property on the best part of the suburb, the typical property. It's the typical property that rises the most because that is where the highest distribution of demand is. Okay, that is what you should be targeting. 5% capital growth on day one. What does I mean by that? It's because there was instant equity. I'll go into that in a second. Okay, who cares about interest rates if you can make like $24,000, in a single day? A $20,000 additionally, $23,000 renovation will increase equity by $70,000, 200K, 200% ROI on that. So it has renovation potential. This one is by Adele, who's a tremendous guy. I actually do recommend you DM him. Like, he will help you no end. He's a buyer's agent. He's a client of mine. He's also becoming a buyer's agent. So it's in his interest to help everyone, but he doesn't hold back or anything like that. Go check him out and he will really, really help you just for free. Okay, purchase price $466. $490 is the comparable valuation at purchase. That is what I mean by instant equity. Total funds required was less than 85. The market rent, this is what I love, and this is why it's like positive cash flow even with higher interest rates. 600 a week, compare that to 466 purchase price. That's tremendous. 1998 build, so you get good depreciation benefits. Well, he lives in Sydney, bought in Perth. Just good. Here you go. Here's the property, nice backyard. This is what I love, like really safe and closed for kids, and it's shaded as well. So, if you're a mum and dad, you've got a couple of kids, when it comes to renting, of course, now we're in a rental crisis, anything will rent. But looking at the long term, this is like so much appeal for families. Okay, this one, $44,000 instant equity, 6.3% yield is really a stunning deal. Okay, you got 9.4% capital growth on day one, same principle. Okay, and this is the thing, like when people, scare themselves into a hole and then they kind of curl up into a ball and say, I'm not going to take my money out of the bank. I'm going to let it erode in the bank account going backwards because inflation is eating it up because I don't know what's going to happen to the property market. But like if you can manufacture, if you can, through your intelligence, if you can make money instantly, then even if this does cost money to hold, like it won't because it's 6.3% yield, but let's say it does cost $2,000, $3,000 a year to hold, like you've made so much money right up front that it doesn't matter. Like the payback, the return on investment is exponential. Okay, so prices are continuing to rise here despite media headlines. And what can I say? Like, it's just great. By Aniban here, purchase price 475,590, valuation at purchase 520. So there's the instant equity story. Funds required 85, market rent per week is 580. Pays for itself. He lives in Canberra. Okay, I don't have so many clients in Canberra compared to Sydney and Melbourne, but from Canberra, bought in Perth. Once again, tremendous result. Here's the property. It's a really nice one, actually. Nothing really cosmetically to be done in the alfresco and entertainment area. There's these nice shades here. Just beautiful. Two left. Stick with me. Okay. Beautiful brick home bought off market in booming Queensland city. So we've pivoted to Queensland now. Rents will rise. Like I put my reputation on this one. Rents will rise $3,000 to $4,000 per year in the next 12 months. How do I know that? Like, that's a kind of a big claim to make. Well, you can assess that, and you should look at these three metrics before buying. The first one is how much rents have already been growing. The second thing is what are vacancy rates. And the third thing is how much stock is there on the market? What are inventory levels looking like? If there's less and less rental stock and less stock for sale, you know that supply is being, crunched. And from that, you can deduce how much exactly rents will rise. Well, not exactly, not down to the dollar, but directionally. Okay, and if they do rise this much, which they already are so far, then even if interest rates go up another 1%, 2%, like you're good, right? You're still good. Okay, this was bought off market by literally, like, here it is. Here's the secret. Just calling a few top agents every Monday for 10-15 minutes. That's all the time investment that you need to put in. And then they start working for you and they know exactly what you want. You're a serious professional buyer. They will bring you properties. Almost like the sales agents now act as buyer's agents for free. You don't just take their word for it, right? Because you know what you're talking about, you know what you're looking for, but they're doing the hard work for you. That's great. This is Tatsuya, amazing work by Tatsuya. Purchase price 420, less than 80 required. 420 is also the rent per week. Big block, low vacancy, great long-term factors as well. Bought in Queensland, like I said, from Sydney. This is a very large regional area, very diversified. And here's the property. I don't really spend so much time on talking through the actual property, what it looks like, because it matters less than the actual numbers. Last one, thank you for being with me so far. Last one, beautiful property, 6.6% yield on a 2-year lease with instant equity. Now, this is the thing, like rents in this particular place, they are going up so much, and it's just so hard for tenants to even find a place that they are happy to sign huge leases, really long leases. And that's manifesting or self-evident by the fact that this tenant is happy to sign a 2-year lease, almost like a commercial lease. A very hot Queensland location where demand, which can be quantified, looking at factors like days on market, job advertisements, stock on market, online search interest ratios, and versus supply, looking at things like building approvals, etc., government and local council planning schemes. You can quantify whether demand is more than supply. Where it is, it's hot, prices are rising, costs nothing to hold every year, and $14,000 under market value by Gibran Sadiq. Amazing work. Purchase for 400, 80,000 required, 510 is the rent, big block, low vacancy, great long-term data. Bought once again, Queensland from Sydney. And you can do this. Anyone can buy interstate without catching a flight, without needing a buyer's agent, with complete confidence and with the local due diligence done. It's not like you're buying sight unseen or anything like that. Look at that. I mean, I'll just leave it there. Look at that property. You know, who wouldn't want to have that data on that property in their portfolio? I'm going to leave it there, guys. Hopefully you're able to marinate your mind, your intelligence, your knowledge base in what is possible even right now. Like, these are recent deals. This is not from like 2 years ago when I'm talking about growth or instant equity or anything like that. You can get these results right now. I don't care if you use me or someone else. The more important thing is don't stick on the sidelines, because there's literally like, there's money to be made. And if you want to make money, of course, for the right reasons, right? It's such a shame. Like if you don't go into the water, it's like someone on the side of the ocean, you know, they're like, oh, the ocean's too cold, and everyone else has already jumped in. They're like, no, it's not actually. You just dipped your toes in and that's cold. But actually when you go under, up to your shoulders, up to your neck, you know, completely submerge yourself, it's actually warm. It's really pleasant. Come on in. But you're just scared because like when you dip your toe in, it's like it's freezing. Okay. You do need to immerse yourself in knowledge to realize that the ocean is not that cold, that there is not going to be a case where property prices, if you follow the data, will drop, okay, by 10, 20%. In fact, it's going the other way. Through knowledge, you can understand that you should put your bathers on and go into the ocean and make money. It's such a shame if you want to do that, but you're paralyzed because of fear. The most important real estate is always the 6 inches between your 2 ears. Invest in that first. Level up. I'll leave links below to my podcast with the same name as this YouTube channel, Australian Property Mastery with PK, on Spotify, Google, Apple Podcasts, and also the Facebook group, same name, Australian Property Mastery with PK, in the links below to my Facebook group. More than 25,000 people there. My name's PK. That's a lot of talking. Thank you for being with me if you're still here, and I wish you all the very best. Catch you later. Bye.